Welcome to the Real Estate Jam session. Have you ever considered using seller financing to grow your portfolio? My guest today, Gabriel Hamel, has done that very thing. And so Gabriel comes on the show today, walks us through what he has done that's worked well for him. Some failures, mostly really good tips that he can give us to really help you get started. So make sure you go up to the video, give us a like, and while you're there, make sure you subscribe. Now, if you're new to the channel, my name is Joe Killinger. I've been a real estate entrepreneur for over 20 years. And I use this channel to really give you information on what works and what doesn't work when you want to become a real estate investor. So make sure you go up, give us a subscribe, and check out this channel. We put out videos twice a week, every Tuesday and Thursday at 2 p.m. PST, so make sure you check back. Thank you for coming on the show, Gabriel. I think that, our viewers, we've got a lot of newer investors on here, or people that are thinking about becoming a real estate investor. So, I think seller financing is something we want to take a look at, and how do we get it started? So can you kind of give us a very quick background, give me like a 30-second, your background, and we'll start there.
Yeah, I'll do my best to make it quick.
Yeah.
Yeah. So, I was the kid that, school was not my environment as far as, a learning environment. I knew there had to be something else. I stayed in school mostly for the social aspect, and I was a high school wrestler. I joined the military while in high school. And then a couple of years after high school, I was training 1 week in a month. I read Rich Dad, Poor Dad in like 2002. And I said, this is what I'm going to do. I'm going to build a real estate empire. And that's how I'm going to be financially free. Deployed to Iraq in 2003, so about a year after reading that book. But my mind was still just set on, hey, I'm going to come back and start buying real estate. So came back in 04, got out of the military completely in 05, and bought my first property in 05. And that was kind of my start.
Okay, so you've been at this a while. Now, your first deal, did you do seller financing, or is this something you caught on to later on?
Yeah, I caught on a couple years later. It was out of necessity. So 05, they're giving loans to everybody, right? And I was one of those guys that I had no job and no money, no income, no down payment. But the bank gave me a loan. And so, now you hear it referred to as house hacking a lot. At the time, it just made good financial sense. I bought a home 100% financed, rented out 2 of the rooms, and lived for less than I could have anywhere else. Did that again in 06 and 07. So I had 3 properties. They cash flowed, the 2 that I wasn't living in, they cash flowed a couple $100 a month. And, by 2008, lending guidelines had changed. Not just anybody could get a loan. And so in 2008, I went back to the bank and said, hey, I want to buy another property. And they said, hey, hold up. Lending guidelines have changed a lot. You actually have to have a job and a down payment and some kind of income, none of which I had. And I said, but I have these 3 houses. And they basically said, we don't care. I said, I've made my payments every month on time. Right. They're cash flow positive. They essentially said, hey, we don't care. I had shut down a small nutrition store, in like 2006, and was working just odd men jobs. And, at the time I was working a minimum wage job in 08 when I went back to the bank. And so a couple months into that job, I just had to make a decision. Like, am I going to work this low paying job for the rest of my life? I didn't have any kind of degree or really education to fall back on, or was I going to go full time into investing in real estate? And so because I didn't have money, because the banks wouldn't lend to me, I had to get creative. And so I spent a year just looking online, mostly on Craigslist, and reaching out to agents and brokers. And then in 2009, did my first seller finance deal. That replaced the cash flow from that deal, replaced my minimum wage job, and I haven't worked again.
So what was your pitch? Oh, I got to hear your pitch, because I got to feel I can see that you're a true entrepreneur. How did you pitch this seller financing to your first property owner?
Yeah, it was interesting because there wasn't really any pitch, and I get that a lot too. Like, hey, what was your pitch? Or, how do you talk sellers into carrying financing? I just started looking for sellers that wanted to carry financing. So I literally got online and just looked up owner financing, seller financing, owner terms for sale by owner. I was just kind of typing in all those keywords. I would also look at listed properties and just ask, hey, would they carry financing? Because at the time, outside of traditional financing, all I knew was hard money, which I didn't feel comfortable at the time asking. Private money, I knew nobody at the time with money, and then seller financing. So I thought that'd be my route. After I did a few deals, I did think, hey, I need to go educate all these sellers on the benefits of carrying financing. But then I realized that everyone who carried financing for me they already wanted to carry financing. They already knew the benefit of seller financing. And it wasn't about me educating them. They knew a lot more than I did initially, right? About what seller financing was and the advantages. So really, even my question today, even to this day, if I know a seller wants to carry financing, I keep it simple. I just say, hey, what kind of terms would you be interested in? And then I just close my mouth and I listen and I go back and take the information they told me and see if I can't put a deal together that gives them, one aspect that is really important to them, but also still makes the deal work for me.
Yeah. Yeah. I think that a lot of newer people need to understand that it's not that different than going to a bank. Now, what kind of down payment did you have on your first deal?
So I had no money down. So
Okay.
So I feel very fortunate that I had no money because it forced me to be creative.
Learn.
And every deal I did 09 through 2013 was all no money down seller financing. I've to this date, other than those first three kind of subprime mortgages, which I don't know if you can consider those traditional, I've never traditionally financed a property. I've always gone seller financing and then eventually also private money, hard money, and then refinancing into more traditional debt. But yeah, all my deals 09 through 13 were no money down, partly because I didn't have money to put down. And the other part of it was the sellers. I found sellers that were less concerned with the down payment and more concerned with the monthly payment. So all the properties that I bought 09 through 13, kind of that initial buildup of my portfolio and my seller finance deals were small multifamily properties, 2 to 8 units. And, the terms are similar in that they were typically interest only payments that was able to increase the cash flow. And then in 2014, I refinanced out of all those seller financing notes and got more traditional loan on those properties.
Okay. Now, what do you do? I mean, you had to kiss a lot of frogs to find that many people to do 100% financing. How did you find all those? You just on the phones constantly?
I was kind of doing it all. I didn't really know what I didn't know. And so, I was the guy I was driving neighborhoods. I would go on Craigslist every night. I made a lot of phone calls. A lot of potential sellers wanted terms that I just knew didn't fit my model. My criteria at the time was literally like, is it cash flow positive? Here's the money coming in. Here's the expenses. And I didn't base it on performance. I based it on actual. So I would ask sellers, at least once we verbally had terms, can I see your Schedule E's? Can I see? A lot of these sellers didn't have profit and loss statements because they were self-managing, but at least I saw their Schedule E's on their tax return to really see, because I've never gone into a deal and I still don't relying on the upside. I look at what's going on today, what are the actuals, and how has the property been performing the last couple of years. And so even though I do buy properties, and almost everything I buy has upside, poorly managed, under rented, maybe some deferred maintenance, I'm still based on, hey, what's the property doing today? So that was really my only criteria. The first deal I did, they never asked me about it. Like down payment never got brought up. And so I'm kind of going, oh my gosh, when are they going to tell me like they need a big down payment? And it ended up being a no money down deal. And that's just how I structured the remainders of my deals moving forward.
Now, are you getting market price when you're doing these no money down, or are you paying a little bit over market?
Yeah, it's a good question. I think with seller financing, because you have the flexibility and the ability to, really manipulate price, down payment, interest rate. I mean, you can go interest only, you can go direct principal. I think you have the ability to pay more if the terms are great. I would take good terms over a good price any day. These particular properties, it was that I bought 09 to 13, I got fair prices. Now these properties had not the best tenants in there. They were below market rent. The properties needed some work. And so for the most part, the sellers were selling because they were tired of dealing with the property. They were typically men and women in their 70s that had managed the property themselves for 30 plus years and were just tired. They were tired of dealing with tenants, the maintenance, and being landlords. So, looking back, I think I got a fair deal on the price, obviously the terms with the down payment. So I don't think I overpaid, but in other instances, you can maybe give market price on the property if the terms are sweet enough.
Right. Yeah. Now, how many are you doing? A good number of interest only loans, or do you not touch those?
Yeah, a lot of my early deals were interest only. I don't think the other question I get asked a lot of, hey, what are typical terms? And I don't think they're all our typical terms, because it really comes down to what are the seller's needs. And if you can find what the seller's needs are and then kind of marry that with what you need the property to do for you, That's where you create that win-win. Early on, all of those initial seller finance deals were very similar. So the interest rate was slightly above market. They were interest only, which I like because you're not paying much towards principal in those first years anyway. And I'm able to increase my cash flow. And then I did a deal with an older couple. They were in their late 70s and they carried fully amortized for 30 years. And what they said to me, because I was curious, like, hey, I'm not putting a date on your life. I just know statistically it's probably not going to live to 110 each. What's the thought here? And they said, hey, we just want income for the rest of our life. And when we pass away, we want our adult children to be able to get that income. So they set it up in a trust without the headache of the property. And that's the deal where I realized I don't know what sellers want unless I ask. So I never assume that I know what a seller wants. I'm not the guy that goes in there and says, this is what I'm giving you. This is my offer. Like, I keep it very casual. And it's really about the more I know about the seller, the more I know what their needs are. I mean, I have example after example of just potential buyers that didn't listen to the seller's needs or know what the seller wanted. So the offer they're presenting doesn't align with what the seller needs. So if I can get face to face with the seller, at least have a good idea of what the seller's needs are, then I can actually present something that aligns with what they're looking for.
Right. On your interest only loans, is there a balloon after so many years? What was that time frame?
Yeah, it really varies. Those early deals, the balloon was typically within 5 years.
Okay. All right. Yeah. That's pretty good. What I'm hearing you say, Gabriel, is that what you are doing is you're going out there finding a winning position for both yourself and for the seller. And I think that's what our viewers need to really hear is, that's how you get deals done. You've got to find that works for everybody.
Yeah, no, absolutely. And I really focus on it being relationship based and less transactional. It can be tricky if it's a listed property or there's an agent involved because you may not know what the seller's needs are. Right. And then it becomes very transactional. So I put something on paper that I give to my agent, to give to their agent, to give to their seller, and I have no idea if that's even what they're looking for. But a great example is there was a portfolio property, the commercial property, and 7 multifamily properties, and it was listed and advertised as a development project. And so the seller kept getting all these offers. Some were low cash offers, some were close to asking, but he kept rejecting these offers. And so when the listing expired, I had the opportunity to speak to him, and what I found out is he didn't want to be cashed out, and even the listing broker didn't market this to what the seller wanted. They marketed this as a developable piece of land, which in the future it will be. I may end up developing this land eventually. But what the seller, when I had a chance to talk to him, what he said is, hey, and he was in his mid-70s, he said, I just want income for the rest of my life. He was a retired judge. He said, I just want income. I don't have family to pass this on to. I just want income for the next 15 years. And if I pass during that time, there's a nonprofit organization that's near and dear to me that I want those payments to continue to go to. And, or if he passes away and he continue, and those payments continue and I eventually refi, he wants that nonprofit to be the one that benefits from that. And nobody heard him, right? And so just hearing what his needs were, I was able to structure a deal to give him what he needed. He didn't want to be cashed out. He didn't want a lump sum. He didn't want to see the property develop. And so I was able to give him an offer based on what I know his needs were and create a really good win-win scenario.
Yeah, I think that's the key. Now, so you started off with single families and 2 to 4s. What's your focus now? Is it still that?
No, it's not. So I still have about 250, a little over 250 units of multifamily and mobile home park units. The last couple of years, I've been really focused in the mobile home park space, and then I'm also shifting towards commercial. So currently, as we speak, I'm in contract on 110 unit mall and 5 industrial complexes. And so I don't want to speak too much on that yet. I had a lot of questions, but I know now's not the time when you're in contract. But I haven't closed on those yet. I really do like the mobile home park space. I'm still buying mobile home parks. I have 5 parks right now. That a lot of those parks, even though it's becoming a pretty frothy asset class, the mobile home park space really fits my model of oftentimes under rented and poorly managed, and there's a lot of value to be added in a park that's poorly managed and under rented.
Yeah. Now, how are you sourcing those deals? Mobile home parks are kind of hard to come by right now. How do you find them?
Yeah, every single deal, if I look back, every single deal, whether mobile home park, commercial, my initial, single family stuff, I can trace every deal back to a conversation or relationship. So, I have friends that are very successful sending out, thousands of flyers and mailers every day, or they're buying lists.
Yeah.
And that's fine, that works for them, but that hasn't been my strategy. I've really focused on just organic networking and relationships. And I don't mean just networking events where I'm shaking hands and passing out my cards. I mean, just building relationships with people that that I want to be in my life. And that may be agents and brokers, and it also may just be, individuals. A lot of my deals have been found because I've opened my mouth and just shared with people what I'm looking to buy and what what asset class and locations I'm looking at. And those deals just kind of naturally flow my way.
Yeah, I think we get so busy just pushing stuff out right now. We forget that, getting face to face, and I think a lot of it's been because of the last couple of years, right? But,
Sure.
getting in front of people and really getting them to see you, hear you actually talk, and it's not just on the screen. I think there's a lot of value in that. And I think you're really
Absolutely.
onto something there because I see agents, we have a commercial brokerage here in LA, and, postcards go out and less than 1% return. But the people that are actually taking the time and on their way in, stopping and having coffee with somebody or going to lunch with somebody, a big difference.
There really is. There
You're
really
gonna get
is.
a lot more. All right. So what's your game plan? You're going to keep going commercial, or are you still going to do the 2 and 4s? The
Yeah,
residential.
I'm still buying mobile home parks. I like
Okay.
that space. I closed on one last week.
Okay.
And so, but I am moving more towards commercial. At this point, when I started buying real estate, I was under the notion. I tell myself I'm never selling a property. I'm focused
Right.
on just cash flow. And I never go into a deal with the intention to sell it. So every property I ever buy, I don't buy it to flip. I don't buy it to resell. I buy it to hold. But I have sold properties, and a lot of it is, I've been buying property since '05 and more seriously since 2009. And so there comes a point where I have strong equity positions, right? And so the cash flow has allowed me to hold the properties for a long time. But when I really look back, a lot of the wealth has been built in the equity and the appreciation of the properties. And so I have sold off some of my smaller properties, some of my single family stuff, some of my small multifamily stuff, and just moving that into bigger deals where I can get more cash flow and acquire more assets and more cash flowing assets.
Yeah. Do you think with interest rates, obviously it looks like we're going higher. Is that going to affect your business model much?
I don't think so. So like, again, when I buy something, like if I buy a property, even using hard money, I'm looking at that as, hey, does the hard money loan, even if I'm paying higher interest, does that support the deal, right? Does
Yeah.
the terms I'm getting today support the deal? Now, obviously, I want to reposition that into better long-term debt. I just don't put myself in a position where I need to do that, or that's my only exit. So I don't really care what interest rates do. I think there's an opportunity, to have success regardless of what interest rates are doing. Historically, they're still ridiculously low, because the market's been up and because interest rates are low. Yeah, I've done some refinances. My first 2 mobile home parks, I just did a couple cash out refis because I look at debt as an asset too, right? So if I can borrow at 3.5%, 4%, and inflation's at 7, 8, whatever percent, just keeps going, then that debt becomes an asset. And the more good debt I have, the more buying power I have. So yes, I'm taking advantage of where the market is and the appreciation and where interest rates are and they're low, and trying to pay myself with getting fixed long-term debt. But ultimately, like big picture, I don't care what interest rates are doing. If they went completely through the roof, that may be a big opportunity to buy more properties with seller financing.
Yep.
I think fear makes people do some weird things. Start seeing people try to sell off their assets. Whether there's a correction or not, I mean, I'll buy in a down market, an up market, a sideways market, as long as the numbers make sense. Like the fundamentals of real estate investing to me don't change.
Right. Yeah. Well, I think you've got the right attitude, Gabriel, because the thing that you said earlier, terms are just as important. They really are. Whatever that price is, higher. If you focus on the terms, you can really make a deal work. I think a lot of newer investors, really don't understand that they're really price focused, right? And so the terms are just as important, or maybe even more important in some cases. So,
Yeah,
but
absolutely.
well, all right. You got any final tips for us, Gabriel? I know you're busy. We're getting a little long here, so I want to see, is there any tip that you can give a new investor that wants to approach a seller on seller financing?
Yeah, I think specific to seller financing, just building relationships. Get really clear on the types of properties, even if that changes throughout the year. Get clear on the types of properties in the area you want to invest, and then just start telling people. Because I had no one in my circle that was in real estate that had money, had that background. But the more I started talking about real estate and investing, it's, you know, those circles expanded and started having more of those conversations. And so I just think it's important, even if you don't have one property yet, just to start telling people, hey, I'm looking for this type of property in this area. And the more people you tell that to, the more you are on top of mind. You want people thinking of you when they come across a property. No one's going to bring you a deal just because. They have to know what you're interested in and where you're buying.
That's so on point. You're absolutely right. Another thing I always like to say is be patient. Just the first deal isn't necessarily the best deal for you. Be patient. And so, well, Gabriel, thank you very much for coming on today. We learned a lot from you. And I wish you much success up there. Keep chugging along. Good luck on the mall situation. And for those of you that are tuning in, make sure you go to the video, give us a like, and while you're there, subscribe. And I'll put Gabriel's contact information down below, so if you have any questions, you can reach out to him. So, Gabriel, thank you very much.
Thank you, Joe. Appreciate it.